Everyone said San Francisco was over, but SF isn't just back, it's become ground zero for the AI economy. All across the country, home buyers have been priced out of home ownership. But in the Bay Area, the AI elites are bidding up home prices to record levels. Today, we're looking at the data to see if this is a sustainable boom or if it's an AI-powered housing bubble. Since ChatGPT launched in November of 2022, luxury home prices have increased in the Bay Area by 13%. But in that same region, in the most affordable neighborhoods, home prices are down 4%. So that's a 17-point gap between the luxury neighborhoods and the cheaper neighborhoods. That's only happening in the Bay Area. It's not happening anywhere else in the entire country. I'm Daryl Fairweather, Redfin's chief economist, and today I'm going to be walking through what I think is the most dramatic example of how AI is reshaping the economy for everyday people. I'm going to look at what's happening in the Bay Area, and I'm going to answer the question that I know is on your mind. Is this a housing bubble? So stick around for the answer to that. But first, let me show you the data. And this chart shows exactly what I'm talking about. You can see that home prices in the most expensive neighborhoods where homes are priced between $3.1 million and $7.6 million, have experienced the most dramatic price growth since the launch of ChatGPT. In those luxury neighborhoods, prices have increased over 13%. But if you look at the neighborhoods that aren't so expensive, home prices aren't growing nearly as much. In fact, in the most affordable Bay Area zip codes, home prices are down 4% since ChatGPT launched. You can see in this map that some of the places with the strongest price growth, those zip codes in dark green, just so happen to be located near AI company headquarters. Those are those black indicators on the map. And this is a new phenomenon because before ChatGPT launched from 2020 to 2022, home prices in the Bay Area were going up across the board. In affordable neighborhoods and luxury neighborhoods, home prices were accelerating. And it was because of low mortgage rates. Those low mortgage rates allowed people to buy homes at higher prices because they wouldn't be paying as much interest on their mortgages. But what's happening now is not like that at all. The AI boom is only really impacting the luxury segment of the market because the people who are buying those luxury homes are the same people getting rich off of AI. And one of the reasons that I'm attributing this to AI is because this phenomenon of luxury home prices going up way more in value than affordable home prices is a uniquely Bay Area phenomenon. Because we looked at the data on home price growth in New York, Los Angeles, and Seattle, and we did not find that pattern of luxury neighborhoods going up more in value than affordable neighborhoods. In New York, it was actually the more affordable neighborhoods that were going up in value the most. And in Seattle and Los Angeles, price growth was pretty uniform across the board. So there is something special happening in the Bay Area. It's not just that rich people are getting richer all across the country. The AI boom in particular is fueling a luxury home price boom. I know what you're thinking. Daryl, isn't this just correlation? How do you know that it's causal? And to that, I say good point. But there's actually a lot of economic research that shows that when people get more money, they spend more money on housing. There was a paper published in the Journal of Housing Economics that showed that this is especially true for wealthy people. Among wealthy homeowners, when they experienced a 10% increase in income, they spent 8% more on housing. So you can bet that when the rich get richer, they spend more money on luxury homes. And if you think about how AI is impacting the economy, this story tracks because the winners of the AI economy are those venture capitalists who invested early on in AI companies, or it's the executives working at those AI companies who can buy a $7 million home without thinking twice. According to reporting from the San Francisco Chronicle, the prices of condos are being bid up by AI workers who want to live close to headquarters. So prices are going up anywhere the AI money is flowing. But then you have regular people who are worried about how AI might be coming for their jobs. They're worried about becoming unemployed and not being able to find a job in their field. Those people are not eager to buy homes. They're backing off of the housing market. And that's one of the reasons why home prices are going down in the more affordable parts of the Bay Area. So the AI economy is creating winners and losers. The winners are eager to spend big on luxury homes, and the losers, or the people who are worried about being losers, are staying put as renters, or they're just staying put in general. They're not trying to make any risky financial decisions right now. But home prices going down in affordable neighborhoods isn't all bad, because if you're trying to buy a home in one of those affordable Bay Area neighborhoods, you're going to be able to get in at a lower price point. But you're also probably worried about what's going to happen to your job or what's going to happen to the Bay Area economy if the AI boom turns out to be an AI bubble that bursts. According to one of our Redfin Premier agents, Ollie Maffey, he's seeing a lot of 22-year-olds with $500,000 signing bonuses, and they want to put that money straight into housing. He said that desirable homes are getting 20 offers and selling for $900,000 over asking price. I'm going to say that again, $900K over asking. That difference between the listed price and what people are paying is more than double than what the median price of a home is in the country. That Redfin agent said that what he's seeing is reminiscent of what he saw in 2020. But this is different than 2020, because in 2020, low mortgage rates meant that everybody could better afford a home. But what's happening now is concentrated. It's only those people who work for AI companies or who invested in AI companies who have experienced this windfall and are experiencing the urge to spend more on housing. And what's happening now is a uniquely Bay Area phenomenon. If you look at this chart, you can see that in early 2023, SF was down almost 10% year over year in terms of prices, but the nation was down just about 2%. At that time, San Francisco was the single worst performing major metro in terms of its housing market. People were writing eulogies for the city. They said San Francisco was dead. Now, if you look at 2026, you can see that price growth in SF is up 11 to 14%. But the national market is barely moving. Home prices are only up about 1 to 2%. San Francisco went from being the biggest loser to the biggest winner when it comes to home price appreciation amongst all the 50 metros we analyzed. And that change happened in just 3 years. All of this extra AI money that is floating around in the Bay Area is showing up in home prices because there's really nowhere else for it to go. In San Francisco, it is incredibly hard to build new housing. So if the supply of housing can't increase, but demand for housing does increase, it means that prices have nowhere to go but up. And here's the answer to that question I promised you. Is this a housing bubble? And the answer is a bit complicated. It's not a housing bubble like what we experienced in 2007. That was back when just about everybody could buy a home because the lending standards were so relaxed. You had people with no income and no job getting approved for mortgages that they just couldn't afford. And when prices stopped going up and interest rates did go up, a lot of people found themselves underwater on their mortgages, which caused foreclosures. Now, this is different because the people who are buying homes in the Bay Area right now can't actually afford them. Those $500,000 signing bonuses are real money that they can use to buy those homes. But what I'm worried about is what happens if that AI money runs out and those buyers willing to spend $900,000 over asking price go away. So I wouldn't call this a housing market bubble, but I'm still worried about there being an AI bubble that could be worrisome for the overall economy. Because if those tech companies turn out to not be able to produce AI that lives up to the hype that everybody has been talking about, their valuations are going to go down. And the people who bought those homes now might not be able to sell them for the same price. They might have to sell for a fraction of what they bought them for. Now, that's their loss to take, and they're the ones taking that risk. It's probably not going to spill over into the broader housing market or the broader economy, but there could be a lot of winners who turn out to be losers if the AI bubble were to burst. We've seen this movie before. When the tech bubble of 2001 burst, home values in the Bay Area did go down, but they didn't stay down for long. So the Bay Area economy's greatest strength happens to be its tech sector, but it's also its biggest liability, because what happens in that sector does tend to spill over. So here are the three things that I want you to take away from this. The first thing is that AI has created a two-tier housing market in the Bay Area where luxury homes are going up in value, but affordable homes are pretty much stagnating. Second thing is that San Francisco's economy is far from dead. There were layoffs a couple of years ago, and during the pandemic, people were leaving, but we can clearly see now that the people who have enough money to live in the Bay Area are willing to spend big for that privilege. And the third thing is that the real risk to the Bay Area economy lies in the concentration of its economy in the tech sector. The tech sector means that when it's doing well, the housing market does well. But when it's doing poorly, we see that also show up in the housing market. So even though the fundamentals of the housing market make sense when you look at how much those buyers are earning, those earnings could go away if those tech companies start to falter. So if you're thinking about buying a home in the Bay Area, I want you to be aware of these factors. If you are one of the lucky people who got a big AI windfall and you're looking to buy a home, just know that you're going to be competing against people just like you who are going to be bidding up the prices of the homes that you want. And if you're a regular person who's trying to buy a home in one of the more affordable neighborhoods, the good news is that it is a buyer's market and you can probably get one of those homes for a deal. But either way, you want to be a little bit cautious because what we're seeing right now is a lot of exuberance in the tech sector that is creating a lot of wealth. But that wealth could go away if the AI boom turns out to be an AI bubble. I'm Daryl Fairweather, Redfin's chief economist. I'm also an author. If you liked this video, please show it by liking it, subscribing, leaving a comment, and also stick around to watch another video. Bye!